in your trading. All right. Give me 1 second. Okay, cool. I'm just making sure that speaker is locked in. Okay, cool. So in SMT divergence, what is it and how is it beneficial to us? Essentially, we are using these two indexes, the S&P 500 and the NASDAQ, to look at one and look at the price action of it and be able to use it to tell the future of what the other index is going to do or what the other index plans on doing. Okay. Again, just like all of the other confluences that we have mentioned in the past, these are absolutely and utterly useless, just like all the other confluences that we have talked about, unless they are used correctly. And SMT divergences are used to help identify when one index is already changing its trend, okay, and the other index is just late to the party, okay? So how can we identify this? It's when one index makes a high and then a lower high, pretty much indicating that it's changing its trend, right? So let's say that NASDAQ makes a high, or here, I'll show a better example. Better example. Boom, we're in an uptrend, boom. NASDAQ sweeps liquidity, creates a high, and then boom, creates a lower high, right? Let's say that this is the NASDAQ chart. However, on the S&P 500 chart, this is what the S&P 500 chart looks like. Where on NASDAQ, we swept out liquidity, we broke structure, and we made a lower high saying that, hey, we swept liquidity, we filled orders, we broke structure, and now we're continuing this downtrend. But on the S&P 500, we get, boom, a move up, and then another higher high. The S&P 500 is just late to the party, and the NASDAQ is essentially signaling to us, hey, we've already filled the orders, we've already broken structure, we're going to continue this trend down, and the S&P 500 is just lagging. And eventually, it's going to end up coming down, breaking this structure, and then moving down with it. So SMT divergences just help us by looking at the two different indexes and can help us see, okay, on NASDAQ, we made a lower high, but on the S&P 500, we made a higher high. So the NASDAQ is the leading index to the downside, and the S&P 500 is the lagging index. NASDAQ is pretty much telling us what the S&P 500 is eventually going to end up doing. It's going to end up going lower. So an SMT divergence to the downside is, and again, it doesn't have to be NASDAQ to the S&P 500 or the S&P 500 to NASDAQ. It can go either way. Bearish SMT divergence is when one of the index makes a higher high and when the other index makes a lower high. Okay, and a bullish SMT divergence is when one of the indexes makes a lower low and the other index makes a higher low. The index that makes the higher low is telling us that this index is lagging and is eventually going to move higher. For the bearish SMT divergence, the index that makes a lower high is signaling to us that this index is lagging and is eventually going to move lower. So let's show examples of this, and then let's talk about how this can be useful in our trading. Let's find some examples here. This is a good example right here. Recently, look right here. So what do we see here? On the S&P 500, what do? We come up and we push above this high. So we have a high right here, and then we have a higher high on the S&P 500. However, on NASDAQ, we have a high right here, and then we end up making a lower high. So what is the NASDAQ telling us about the S&P 500? It's telling us that, hey, even though the S&P 500 closed above this high or pushed above this high in general, it's telling us that, hey, we're going to go lower and the S&P 500 is just late to the party and you should probably get in shorts because we're going to go lower. And oh, would you look at that? What a perfect signal. It did end up going lower. Okay, so that's an example of a bearish SMT divergence where NASDAQ made a lower high, but the S&P 500 made a higher high. We can use that as a confluence to show that, hey, price wants to go lower. All right. Let's show this in a bullish scenario. Look at this right here. We have these lows right here. Let me make sure I'm marking out the correct ones. When was this? August 20th. We have these lows right here. On NASDAQ, we have these lows and then we make lower lows right here. We sweep out liquidity. Okay, we make lower lows on NASDAQ, but on the S&P 500, we have those same lows, we end up making a higher low. The S&P 500 is essentially telling us that, hey, even though NASDAQ pushed underneath these lows, this downtrend, whatever, this high time frame downtrend that we're in, it's not going to continue. And this is actually a liquidity sweep. This is ES pretty much telling us, hey, we're not going any lower. NASDAQ is behind. And we're going to move higher here. Because this is a higher low than these lows. And this is a lower low than these lows. So NASDAQ is the lagging index and is going to want to catch up with the S&P 500 and move higher. Okay. Now you're probably saying, well, what type of confluence is an SMT divergence? An SMT divergence, it's not a it's like both. It's both a continuation confluence and a confirmation confluence. And when we fully break down our strategy, I'll show you guys in each, I guess, step of our strategy how and where an SMT divergence is used both as a continuation confluence, but also can be used as a confirmation confluence, because it can be used to show the continuation of the current trend that we're in, but also in the example that we showed, like right here, it can show and mark the bottom and the reversal of a trend, right? And it can be used as a confirmation confluence. All right. So before we add that to this, I want to talk about 79% extensions. All right. Man, I know that this has been a lot of info. Thank you guys for staying on here for all this time. We are plowing through this. This has been a lot. So there's already been some people that have dropped off. So for everybody that has made it this far, you guys are some fucking dogs. All right. So 79% extension. Super easy to identify. It's a confirmation confluence. Same exact thing as a break of structure and inverse for value gap. I'm not going to go too deep into it. It's literally just as simple as identify what trend we're in, just like how we do with all of our other confirmation confluences. So for an uptrend, boom, we identify, awesome, we're in an uptrend, and let's say that, boom, we came up and we swept out liquidity and we're looking for price to change direction, right? All that we do is we grab our Fibonacci, we draw it out like we're drawing out equilibrium. We take it from the most recent low up to the most recent high. And I'm going to go ahead and let you guys copy my settings real quick.
It's the only good fight there is. It's the only good fight there is.
Okay. So again, now that you guys have these copied, we're looking at really none of these other marks besides the 79% extension. Okay, the 79%. So when we're in an uptrend, we take the Fibonacci from the most recent low to the most recent high. And all that we're waiting to do, it's literally just like break of structure, except it's a little bit earlier. Whoa. It's just a little bit earlier. And all that we're waiting for price to do is give a candlestick closure underneath this line instead of this most recent low. That's all we're waiting for. We're just waiting for a candlestick closure underneath the 79% extension. Okay, so it's just like break of structure, it's just a little bit earlier. And then same thing when we're in a downtrend. We're looking for, let's say, okay, we swept liquidity. Now we're looking for our confirmation confluence. Okay, we take it from the most recent high down to the most recent low. And then all that we're waiting for is for price to close above the 79% extension. Right here. Okay. Now, I would like to preface with this confluence here. I don't use this that often. I prefer, and I typically use break of structure and inverse fair value gap over this. This is like last resort. So if there's no potential inverse fair value gaps in sight, and if the high or the low for price to break structure is like super high up or super down low, you know, so let's say that we're in a downtrend, right? And the swing down is like all the way down here. And for whatever reason, there's like no fair value gaps throughout this entire leg down, right? To give us an advantage to be able to look for whatever, an early entry or early look for us to be able to see that, okay, we're actually going to change direction. And for us to be able to break structure, we have to close above this high that's all the way up here. and there's no fair value gaps, that's when I'll use the 79% extension. And believe it or not, even though, you know, it's pretty close to the most recent high, sometimes that's the advantage that you need over the market. And it can be useful in some cases, but for the most part, I'm almost always going to be using breakup structure or inverse fair value gap. I only use this like when in dire need. Okay, so I want to preface that. Wow, guys. We have officially covered every single confluence that is necessary for our strategy to take place. And I'm sure some of you guys are sitting here scratching your head saying, well, hey, whatever happened to those order blocks and whatever happened to those breaker blocks? Nah, bro. I've seen over the past 6 months that one, teaching people order blocks and breaker blocks confuses them more than benefits them. And two, when an order block or a breaker block gets filled, either a fair value gap gets filled as well or equilibrium gets filled as well. So there's literally no reason to even mark out or use order blocks or breaker blocks. I've just seen so many times over and over and over again that people, they struggle marking them out. They struggle using
TJR,
them.
bro. He knows I'm dumb.
And as time has gone on, I just look and I'm like, okay, what confluences am I using the most? I'm only using fair value gaps and equilibrium, because even if an order block or breaker block gets filled, equilibrium's getting hit anyways, or a fair value gap is getting hit anyways. So why do I even need those? You don't need them. So for the people that are going to ask about those things, they're fucking useless. Not that they're useless, but the confluences that I've talked about today are the only ones that are necessary, at least in my opinion, to give us the probability that is needed for us to beat the market. Now, holy smokes, guys, we've covered literally every single confluence necessary to build out our strategy. We talked about how to identify them, how to use them, when they're invalid, when they're valid. You're probably saying, yes, holy shit, dude, can we get into strategy already? It's been 3.5 hours, and I would love to do that, but there's still more to cover. Not necessarily with confluences, because confluences is just one step or one piece of the puzzle. But it's with time and timing the market. So there are 3 sessions. Finally, we can chill out a little bit about, you know, marking out confluences and talking them out. Okay. We can finally start talking about the timing of the market. Okay. And what sessions there are and how we can use time to our advantage, because it's one thing just putting these confluences together so that it makes sense in our head, but it's also another thing with timing the market to our advantage so that we know that the market is going to move in our favor at these specific delivered times, or when price wants to deliver high probability price action for us. Because again, if you were to just put all these confluences together in a strategy and execute every single time that the strategy presented itself, believe it or not, you would still be unprofitable. Because if you were executing during Asian session, when these US indexes are closed and the US, and there's no US money being put into the indexes, then you're probably going to lose. If you're taking trades during the London session on these US indexes when the US market is closed, you're probably, and more often than not, going to lose these trades. Okay, so we want to be taking trades during New York session, so we need to be able to identify every single session's times. And on top of that, we need to identify the times during New York session that price gives us and time gives us the highest probability of these things playing out. So let's get into it. Important times for us to know, and this is going off of Eastern time. If you guys are on Pacific Standard Time, if you guys are in freaking China, if you guys are in India, I don't give a fuck. We're using Eastern time. And that the reason why we're using Eastern time is because that is what the US stock market moves off of. I'm not even on Eastern time right now, and my brain and everything that I do work-wise is built on Eastern time. Okay, I'm an hour ahead of Eastern time, and I still do everything as if it's on Eastern time because this is my job. Okay, so all of these times that I'm going to tell you guys, it's on Eastern time. So the first thing that we need to make sure that we're doing is that our trading view is set to Eastern time. So go down here, pull up your computer, or just put a note in your notes to make sure that your guys' shit or your guys' time is set to Eastern time, or else you guys are going to be trading who knows fucking what session. Okay, so make sure it's just click to New York, okay, because that's going to be Eastern time. All right, so there's 3 sessions that we need to know and understand. London session, Asian persuasion session, and New York session. London session goes from 3 a.m. to, now, I'm going to write this down, but I'm going to preface this. So London session starts at 3 a.m. and actually goes until 11 a.m. Eastern time. However, we are going to want to mark it off as closed at 8 a.m. or sorry, 8:30 a.m. because at 8:30 a.m. is when New York pre-market starts. So we only want to mark out the session times when it's just that session that is open. All right. Asia session goes from 1800, oops, 1800, so that's 6 p.m. Eastern time to 3 a.m. Eastern time. And then New York market opens at 9:30 Eastern time, a.m. Eastern time. The pre-market opens at 8:30, so we can go ahead and add New York pre-market. New York open is at 9:30 a.m. And then it closes at 1600 or sorry, no, 1700 or 5 p.m. Eastern time. Okay? These are very important times that you guys need to know because they are going to tell us significant highs and lows or draws on liquidity in the market that are going to be beneficial for us. And these sessions help us establish our daily bias and help us establish our daily profiles to help us understand where the market wants to go on any given day. All right. So London session is from 3 a.m. to 8:30 a.m. Asian session is from 6 p.m. to 3 a.m. Let me move this up. Boom, so it's in line. Bruh. Okay, there we go. Okay, so boom, Asian session opens at 6 p.m. Eastern time. It closes at 3 a.m. Eastern time. London session opens at 3 a.m. Eastern time. It doesn't technically close at 8:30 a.m. Eastern time, but that's when New York pre-market opens. And then New York market opens at 9:30 a.m. Eastern time and closes at 5 p.m. Eastern time. You're probably saying, well, what happens in between 1700 and 1800? Nothing is open, and that is spread hour. You never want to be trading during spread hour because no markets are open and the spreads widen drastically. That's especially if you guys are trading Forex and commodities.
Yeah,
you guys don't have to worry about it if you guys are trading futures because you will never be trading at that time. And if you guys are trading Forex and commodities, you shouldn't be trading.
What a marathon, man. Whew.
At that time anyways, because there's going to be no volatility because no markets are open. Okay. So we want to write these things
your
down.
mother knows all about spread hour, I'll tell you that.
Now, we use these times to identify session highs and session lows, previous day highs and previous day lows to help us determine what our daily profiles are. Okay. Cool. You guys have these written down?
Yeah, you already wrote them for me. Damn it.
Cool. Now, the last thing that we're going to get into before putting all of these confluences together is identifying our daily bias and identifying daily profiles, okay? So that when we come into the market, coming into New York market open, we can easily identify what direction we want to trade into, okay? And then we can get into strategy creation and put everything together. Okay, so daily profiles. There's 3 daily profiles that we have. There's 3 of them. Okay, we will always have one of these profiles present themselves every single time. Wait, you want to see these? Wow, no, nothing crazy. Okay, so there are 3 daily profiles. Every single day, one of these profiles is going to present themselves. It's either London session manipulation into New York reversal. That's the first one that can happen. The next one that can happen is London session manipulation reversal, New York continuation. And the last one is London session consolidation into New York manipulation and reversal. Now, we are able to identify these daily profiles by looking for manipulations or lack thereof, or lack of manipulations, okay, of our significant draws on liquidity. So high time frame, highs and lows, previous session highs and lows, okay. And all of this is going to make sense when we start getting into our actual execution and our actual strategy. But again, we're able to identify these profiles by looking for manipulations of our significant draws on liquidity. Our significant draws on liquidity are high time frame highs and lows, previous session highs and lows. I'm going to show you guys how to mark those out. Okay. And then on top of that, on top of these daily profiles, we want to prioritize targeting low resistance, high time frame, significant draws on liquidity. Remember, we want to trade away from high resistance liquidity. So this is our high resistance liquidity, and trade towards low resistance liquidity. So if we have highs stacked up here, we want to be trading towards that. And make sure that that is in line with the daily bias that we have going into the day. So what I'm going to do right now is I'm going to just show you guys examples of these profiles playing out without without showing you guys how to enter. And then once we can just show and prove that these profiles work, we can then get into our entry strategy and putting everything together. Okay, so let's get into this here. Let me go and let's just do, fuck it, let's go to like here. Sure. So what we're going to want to do, let's just start from this week. So this is Monday. So this is New York market open right here, 9:30. And then what else are we going to want to do? We're going to want to mark out London session. So London session starts at 3. Then we're also going to want to mark out Asian session. Asian session starts at 1800. You guys have these written down? You guys remember? You guys have what these are? Because I'm going to go ahead and get rid of this. Give you guys a second to write them down, just in case.
That one I wrote down. They have pretty good notes, man.
All right. Whew. Okay. So let's look at this right now. First thing that we're going to want to do is mark out session highs. Okay, this is kind of getting into our strategy, but this is what we're going to want to do. Okay, we want to mark out significant highs and lows in the market. Okay, and mark out our session highs and lows in the market. So if we look at London sessions window right here, we see, boom, this is London session high. It's actually right here. This is London session high. And then boom, this is London session low. This is Asian sessions high, and then this is Asia sessions low. Now Asia sessions high, we can go ahead and get rid of that because London session moved through it and it didn't really cause much of a movement. Again, so that draw on liquidity is not useful for us anymore. So we've marked out the session highs and lows that matter. And then if there's any other hourly highs and lows that we want to mark out, we can. So we have an hourly low right here, a move down, then a move up. Sure, we can go ahead and mark this. We can also go ahead and mark out this hourly high, and then we can do the same thing on the 4 hour as well. Okay, but for the most part, when you mark them out on the hourly, they've all been marked. Okay, we're not going to get into entries just yet, but I'm just going to show you guys these daily profiles moving and happening in real time. During London session, did we sweep out or cause any form of manipulation of a high time frame high or low? The high time frame high right here, high time frame low right here, previous session low right here. No. So if we don't see any form of London manipulation, what does that mean? What daily profile does that put us in? There's two daily profiles that start with London manipulation. London manipulation, New York reversal. London manipulation reversal, New York continuation. And because London session didn't manipulate any high time frame highs, there only leaves us with one daily profile that this could be. New York session, manipulation and reversal. Now let me show you guys exactly what happens when New York session opens. New York session opens on this candle right here. What do we end up doing? We move down, we manipulate London session low, we manipulate Asian session low, and then we reverse to our previous draws on liquidity that we had marked out before. That's one of our daily profiles happening in real time in front of our face. We see that London session didn't do anything. There was no form of manipulation, no form of reversal. Awesome. We know that it's going to be a New York manipulation and reversal. So we can expect for New York to want to push into one of these high time frame draws on liquidity to manipulate, and then we can expect to look for New York to give us some form of reversal towards our other draws on liquidity. Let's go to the next day and let's see what daily profile it was. So let's go ahead, boom, Asian session, London session, New York session, okay. Asia session high, Asia session low, London session low, and then we have London session high right here, and then Asia session high right here. London session highs and lows end at 8:30. I forgot to preface that because 8:30 is when New York pre-market opens. Okay, we've marked out the session highs and lows. What else can we do? We can go ahead and mark out other hourly highs and lows that we have. So we have an hourly high right here. We have an hourly high right here. We have an hourly low right here. Hourly low right here. Another hourly low right here. Another one right here. Sure. That's great. Okay, so the first thing that we want to do, I know this looks freaking crazy with all of these drawings on here, but the first thing that we want to do is we want to look at London session and look at what London session did. Okay, so London session opened, we come down and then we swept out Asia session low. So awesome, London manipulation and then reversal. So at this point in time, like right here at around 7:30, we're probably thinking, okay, we're going to want New York market open to be able to give us a continuation. However, once London session starts taking out these high time frame draws and liquidity, that objective is taken out. So the manipulation and the reversal objective of taking out these previous session and these previous hourly highs is now taken out. And that was taken out before London session even closed. So that daily profile has been taken care of completely by London session. So now we need to see a new daily profile open up. And there's really not much time for that to happen besides New York pre-market. Well, during New York pre-market, what do we see happen? We push past London session highs. We push past Asia session highs. We take out, boom, hourly high here, hourly high here. So this is now New York manipulation and reversal. because the London session daily profile played out throughout all of London session and completed the daily profile. So that leaves New York with a brand new daily profile for it to create, which in turn was it sweeping out these highs, sweeping out draws on liquidity, New York manipulation, and then reversal down to manipulating these highs and then reversing down to significant draws on liquidity through London session lows, previous day lows, hourly lows, and 4-hour lows down here. Let's go to the next day and then show or see what happens then. Boom, so that was New York. Let's go put on Asia session, London session, New York session. Okay, so this is another, I mean, geez, bro, we're only getting New York manipulation and reversals, but we'll hopefully, as this week goes on, get other daily profiles. But here's same situation. We look at London session. Did London session manipulate any of our significant draws on liquidity? We have an hourly high up here. We have London session low right here. We have another 30-minute low right here. We have Asia session low right here.
Oh, it is live. Look at his time.
Asia session high right here. Yes, London session does take out Asia session high, but we don't see a strong reversal off of that. So that draw on liquidity is then invalid to us. Boom. Cool. Okay. We'll kind of speed run through this so we can get into actual executions here now that we're like slowly starting to understand daily profiles. But daily profiles, the main reason why we have them is literally just so that we can use session highs and lows to our advantage and look at what is happening off of them. So again, New York market opens. Awesome. We come down and we take out draws and liquidity to the downside. New York manipulation, reversal back up to an hourly high up here. I want to find other examples of the other daily profiles playing out, so I'm kind of going to speed run through this now. Still nothing. This is still, again, another New York manipulation. Hopefully you guys can start seeing these just happen. Again, we look at London session. London session, do we take out any significant draws on liquidity? No, but right when New York market opens, we come up, we sweep out, boom, these highs, we sweep out London session highs and then go down and target London session highs, London session lows, Asia session lows, previous day lows down here. Let's see the next day. If we can get any sort of this was Trump tariff news. Or wait, no, that was a big liquidation event. Let's see. Still same. Let me go to the next week. I want to find the other examples of the daily profiles just to show you guys, and then we can get into actual execution work. Okay, here we go. Finally.